Welcome back, learners. So I am Manisha, and in today's video we will solve further short question of budgeting, and these all questions are from the Kaplan exam kit. Because I got a request from one of my viewer that she wants video on this topic. So here it is. Here is the video, and if you we solved a few questions in the previous video. In case you have been missed out, you can still access those video available on my YouTube channel at free of cost. There is no any membership subscription that you need to pay in order to access the video. It's free of cost. You can go and check it out. So from in today video we will solve from 292. Previously we have solved up to 291. All right, so let's solve this question 292. Okay, so what the question is saying, a job requires 2400 actual hours for completion, but it is anticipated that ideal time will be 20% of the total time required. If the wages rate is $10 per hour, what is the budgeted labor cost for the job including the cost of ideal time? So in case ideal time figure, you need to check out the two things, whether the hours given is the net one or the total labor hour. Okay, so if it is a net one, that means we need to do gross up, but if it is the total figure, in that case we don't need to gross up. Okay, so I will show you how. So basically in this question, what the question is saying, so actual hour is your 2400 hours and ideal time is 20%. So that means this actual labor hour is without considering any ideal time. So it's only represent 80%. Okay, so remaining 20% is your ideal time. Okay, so you need to figure out these things. So that means if we are calculating the labor cost, we need to consider both the actual hour we require to complete those work as well as the ideal time that we expected to be incurred. So we need to add both of these in order to find the total hours. The same case is in this question as well. So that means our total hour, if we are calculating the total hour, which is calculated as actual hour plus the ideal time, but we don't know the what is the ideal time. So what you can do is you can take this actual hour, which is the 80%, and we need to find the 20% value, which is the ideal time. So we will multiply 20, the value which we need to find out ideal time. So we need to multiply the percentage of ideal time, that is a 20, and we will divide it by 80%, because this 2400 is only the 80%, and then after adding these two we will get the total hour, which is 3000. Or what you can do is let me show you. Yes, or what you can do is you can simply divide 2400 by 80%. You can directly get the 100% value. Okay, you don't need to calculate the first ideal time, then after that you need to add back to the actual hour. You don't need to do the calculation. You can directly find this value by dividing this 2400 by 80%. So we got 100% value, and which will include both the actual hour, which is 80%, and the 20% of the ideal time. Now the question didn't end here. The question is asking the cost value, the cost of labor. So what we have to do, we have given the rate as well, that labor are paid 10 per hour, and the total hour we need to complete the job is 3000. So what that means, our total cost will be 3000 multiplied by 10, and that will give our value of 30,000. Okay. So next question is, what is the continuous budget? Okay. Okay. So first statement says prepared in the advance for the period in the question, and then update regularly by adding the further periods, also known as rolling budget, always prepared for the full year in advance. So it is prepared in the advance. First statement is saying prepared in the advance for the period in the question. See, all the budget are prepared in the advance, not only the continuous one. So obviously, continuous budget is a part of the budget. So it will also be always prepared in the advance for the upcoming period, month, or the quarter. So this allows the organization to plan ahead and as well as to monitor their performance. Okay, so it apply to the all the budgets, so it will also be applicable for the continuous budget as well. So next one is updated regularly by adding the further period. So this is the main feature of the continuous budget. So as it is also known as rolling budget, and it's a for example, if you prepare a 12-month budget from Jan to December, once January ends, so you will add up the next January of the following year. So the budget always cover 12-month horizon. So this ensures the budget remain relevant as well as this ensure that budget remains relevant. Yes. And the third one is also known as rolling budget. Obviously it is another name of the continuous budget. So that's why option 1, 2 and 3 is correct. So by looking at the option, our option B and C is already out. D is also out. We got our answer, right? So last is the always prepared for the full year in advance. So it is not correct. Why? Because it is not always prepared for the full year in advance, but they are regularly updated to maintain the set time horizon. Okay, so that's why it's incorrect, and our correct statement is first three. Okay, now next question. Okay, the ability to meet the needs of the present without compromising the quality, without compromising the ability of the future generation to meet their own needs is best described as. So you are already familiar with this, right? So obviously this is the straightforward definition of sustainability. So I think it will not be the it is very straightforward and it won't create the doubt to you, right? So because it's very straightforward definition of the sustainability, and if we talk about the corporate responsibility, obviously it's a commitment of the company regarding the ethical practice as well as social responsibility, right? So that's why A could not fit to the above definitions, and obviously B is our answer. And if we talk about the business ethics, it's basically a moral principles applied in the business, and obviously it will not necessarily describe about the balancing the current and the future needs without compromising the ability of future generation to meet their own needs. And the last is the nature capital, and it refers to the stock of natural resources. So obviously it won't fit to the definition of sustainability. Okay, so again we are back on the numerical part, and I think from this question and onward you will have it interesting, because I obviously love to solve the question of budgeting, especially of this kind. So let's solve this question together. Okay, so Vincent is preparing a cash budget for July, and his credit sales are as follows: April, May, June, July. Okay, his recent debt collection experience has been as follow. Okay, how much Vincent expect to collect from the credit customer during the July? Okay, so we have given the data for the few months, that's from April to July. Let's copy paste that. Okay, and what they says, okay, so they also provided the credit sales of these months. So let's copy paste that as well from the questions. Yes, here it is. And now the trick is here, to apply this percentage and to calculate how much cash has been collected in the month of July. Okay, so as per this data, current month sales 20%, means if we are selling in the April 40,000, so 20% of this 40,000 will be received in this month. Similarly, for the May, if we are selling 30,000 in the May, so that means 20% of 30,000 will be received in the month of May. So it means, let me show you this calculation first, and I will speak. Yes. So here it is. So 20% of 40,000 will be 8,000 will be received in the month of April. Similarly, for the May, 20% of 30,000, that means 6,000 will be received in the month of May, and 4,000 in the June, and 5,000 in the July. As the question is only asking for the July, you don't need to perform calculation for the previous 3 months. I'm just showing to have a clarity over the concept. Now, next is prior month sales 60%, means as we have received 20% of the 20% of 40,000 in the same month, now 60% of this 40,000 will be received in the following month. Means if we are receiving in the month, that means if we are in the month of May, that means prior month, that is April, so 60% of 40,000 will be received in the month of May. So let's perform this calculation and you will have a clarity once again. Okay, yeah. So you can see I have just applied 60% to the each month sales and transferred those amount to the following month. Okay. Okay. Now sales 2 month prior. That means the remaining amount. So we only receive 32,000 amount from the sales of 40,000 in the month of April. Still some amount is remaining, so that will be received in the June, and that will be 10%. So let's do that as well. अब इसको यहाँ पे, yes, so 10% of 40,000 will be received in the June, and 10% of 30,000 will be received in the July. Okay, so that's it. Okay, so now question asks you for the July only. So how much we receive? 20,000. Let's do the sum. Yes. So July में हम लोग ने सिर्फ 20,000 receive किया. So that's the amount that we receive from the customer during the July. Okay. Okay. So let's move to the next question. That's a 296. Okay. Okay. DRF projected revenue for 20x9 is 28,000 per month. Okay, all sales are on credit. Okay, so for means for 12 month the sale is 28,000. It's just only projected figure, and all of this sale will be sale, all of the goods will be sales on the credit, and receivables are accounted settled in the 50% in the month of sales, means 50% of this amount will be received in the same month, and the remaining 50%, 45% out of the remaining 50% will be received in the following month, and the 5% will be written as irrecoverable debt after 2 months. What is the budgeted cash collection for the March? So question only asks for the March. Okay, so let's do this calculation, but I will add February, April as well to make clarity over your concept. Okay. Okay, so now what is the credit sales for the each of the months? It's 28,000. Okay, so it's 28,000. Right. Now the 50% of the amount will be received in the same month. So 50% will be received in the same month. 14,000, 14,000 and 40,000. And next says for remaining 50%, that means 45% of this amount will be received in the following month. Okay. So yeah, we have done with that. Now, do you think irrecoverable debt will impact our budgeted cash? No. So how much cash we have collected for the month of March? So we need to add these two figure only, and that will give you 26,600. Okay. So that's it. That's what the question is asking. Okay, so let's move to the question number 297. So, a company anticipates that 10,000 unit of the product jet will be sold during the January, and each unit of jet requires 2 liter of the raw material W. Actual stock as of the 1 January and the budgeted inventory as of 31st January are as follow. So they provided a product unit and the raw materials. Okay, and 1 liter of W cost $4. If company pays for the all the purchase in the month of acquisition, what is the cash outlay for the January purchase of W? So this question is same as we have done earlier. If you remember this one, yes, this is exactly the same as this question. So I will suggest you to give a try from your end. In case you didn't get the answer, please let me know in the comment box. I will try my best to address your queries. Okay. Now 298. A company has 2 month receivables. It receive a cash of 45% of total gross sales value in the month of invoicing, and irrecoverable debt of are 20% of the total gross sales value, and there is 10% discount for the settlement within the 30 days. So what proportion of the first month sales will be received as cash in the second month? Okay, so let's suppose the sales value is 100. So let's assume total sales value total sales value is 100. Okay, so now the cash received will be 45%, right? So cash received will be 45%. So 45% of 100 will be also 45. But this is after discount. Okay, so that means it will be 90% only. So we will divide this by 90. So in order to get the gross of value, so gross value will be 50. And again, IRD will be your 20%. That means 20% of 100 will be 20. Right? So how much amount is left remaining which will recover in the next month? So from 100 we assume sales as 100, so out of which we receive the cash of 45, but it was after discount, so I have gross up this amount, so which will give the gross up value of 50. Then again we need to subtract the IRD, that is the irrecoverable debt, which is 20% of 100 equal to 20, and after this still 30 is remaining which will be recover in the next month. Okay, so this one is question number 298. All right. Okay, still we have few questions remaining. We will continue this in the next video. So I hope you have enjoyed my video, and please share it among your friends, and thank you for watching.